Greetings, everybody. This is Jeff Scott, and welcome to this week's edition of my top-down review. It is about midnight going into Sunday morning, so it truly is March 21st, 2021. Again, my name is Jeffrey Scott, and my email address, if you need to reach out to me, which I welcome, is at hgsi.gmail.com. I entitled today, Don't Let a Choppy Market Play Chutes and Ladders with Your Retirement Money. Now, of course, when Ian would talk about this, it would be snakes and ladders, which is how it's done in England, but I guess in the US we weren't, as children, tough enough to take snakes, so we got chutes. And if you think about that game, it's a game where ladders can get you up and closer to the finish line, and ladders are great. And I guess ladders are bull markets, but a tough market could be that chute where, just like you were as a child at the playground, you get in and you go down to the bottom, and you don't want to do that with your retirement money. Now, as always, I welcome your comments. You can email me, as you see here. There's a place in YouTube when you watch a video that you can put comments below the video. There's an up and a down thumb. I appreciate you voting up thumbs. I do this mostly as a hobby, but everybody has an ego. I have one too, and it's nice to see my numbers grow, but they only grow when somebody gives positive comments or an up thumb, and then YouTube sticks it in more people's inbox. So enough of that. The other thing is, if you're watching this and it's blurry, I do this in 4K at 125% magnification. In YouTube, the initial load is a horrible downgraded SD version. If you wait till probably about 2 a.m., you'll get a 4K version. Also, in the comments below, I put a link to my Dropbox if you want to download it in 4K. That note, let's get rolling. As always, this is for educational purposes only. Anything I talk about is just education and should never be construed as investment advice. I'm a doctor, not a broker. I own or hold no licenses except for a medical license, and a medical license is not one that allows me to teach you how to trade. I am independent. I don't work for any software vendors or trading companies, and I pay for the tools that I use. Trading involves risk, and you and your own are solely responsible for any investment decisions you make. Not going to spend much time here. You can pause this, but these are some of the places where I learned. And if somebody asks me, what is my style? I tell them, my style is to be your own guru. As Ian Woodward used to say in his voice, which I would never be able to reproduce, Jeff, I'm not a guru. I teach you to be your own guru. You need to take responsibility. No one cares about your money more than you do. And frankly, who's going to bail you out when you retire if you don't worry about it yourself? I know we're sort of in a bailout culture now coming out of COVID, but at some point we're going to be paying for that, and there's not going to be enough money to take care of you if you can't save it on your own. So I started with Cancelim. It was improved by Ian Woodward, and I've learned from all these people. Happy birthday, John, who was at his 60th birthday party this week. Good friend as well. I own a lot of software. I own a lot of things that I keep paying for reasons I have no idea, that I never use. I'm sure I'm not the only one. But if you capture me in the middle of the day, you'll see TradeStation and Thinkorswim running. You'll see HGSI, probably EdgeRater. Certainly after hours, you'll see EdgeRater. And then on TradeStation, you're going to see the John Person indicators. And really on TradeStation and Thinkorswim, also the Q tools and the Dr. K tools. I also have the Q Edge up and running because it's just an awesome way during the market day to understand what's going on. The yellow writing is important. No one pays me to say good things about their stuff. From time to time, people offer me a fee to introduce them to my followers. And I tell them, no, thank you, but you can give it to them as an additional discount. I'm truly an unpaid volunteer. This is education. Now, I started doing this to provide unofficial volunteer support for new HGSI users. And I still do. I know the website's going to be changing soon, so I better go check and make sure this isn't out of date. But the most important thing on free 30-day trial, they don't even ask you for your credit card. In this day and age, imagine that. Under investing strategies, you'll see hundreds of movies. For new users, I have a couple of videos I'd be happy to share with you that review the vocabulary that I use, most of which I learned from Ian. Funny names for homemade indicators. Where are we? At the end, I'm going to ask you, at the end of the PowerPoint, I'm going to ask you to tell me, are we in a strong market? Are we in a mixed strong? Are we in a mixed weak? Are we in a weak market? Because that really determines how you're going to do next week. I don't care how good I am at picking stocks and how good you are at picking stocks and managing your account. The market's the biggest determinant. Now, if you ask me, and I won't tell you yet what group I'm going to put it in, we keep getting into periods as we are now where it feels like we have made it through stage 3 and we might be entering stage 4. And the minute I say that, and this goes back, gosh, a long time, a couple of years, the minute I say that we're rolling over, another leg up comes. So don't forget, another up leg can be coming, but I think this market is certainly in a, maybe not dangerous, but in an area of concern. So if you're uncertain or concerned, that means you should be raising cash, have smaller positions, and maybe even selling some way out of the money premium. I am doing all of those and more. If you were to look at my portfolio, you'd see I have a lot less stocks than I had 2 weeks ago, and I even pruned some of my long-term holdings. That said, I still have holdings. Friday sector review kind of shows a mixed market. You could see the Russell and the Nasdaq were up. The Russell was down big on the week, though, as I'll talk about. As you go through, you can see materials didn't do well on Friday. Energy looked pretty strong. Financials were more weak than strong. Same with industrial. Staples looked okay, as did technology and discretionary. Utilities strong. Healthcare strong. Communications mixed weak, and real estate were weak. So clearly a week of variability, I guess. Let's take a look at the major indexes. And again, I'm going to ask you to tell me what kind of a market we're in right now. Of course, you can't really tell me because I'm taping this and it's not live. So here is the E-mini futures. Yes, we've had higher highs, and we set an all-time intraday high here on Thursday. Here we had a low close doji on Thursday. So it's a red candle high, failed new high, pulling back. This white line is the 50. If it's my guess would be we have a little bit more to come back on here and then we bounce. No one says we're going to do that. Here we bounce closer to the 17, of which we're sitting right on. But am I a bull or a bear there? I'm mixed because I think, you could draw trend lines here and we're in the lower part of the trend, but no one says we can't come down and tag the 50 or even punch through it as we have in the past. That is the S&P futures, have come a long way from those March 23rd lows. Not quite a double, but 2174 to 3978. That's at 1800, about a 90% move there. Let's look at the Dow future, Nasdaq futures. Now the Nasdaq futures more concerning. The Nasdaq futures ended the week with a doji, so an indecision bar. In fact, and not quite a doji on the S&P futures. The S&P futures are in a person buy signal, but the Nasdaq, whoops, sorry about that. I hit the wrong button. I hate when that happens. Oh, I hope I didn't just kill it. I did. Oh, you big dummy. All right, let me just kill this one then. I'll bring it over in 1 second. I closed it by mistake. Only big dummy here is me. Unless I've just made a double mistake. Let's see. No. All right. All right, so we're back here. So this is the E-mini. We go back to the Nasdaq. We said was in a person sell, has broken through the 50. If I look at the Dow Futures, a little bit different than the others, well above the 50 and the 17, but concerning a new sell signal. Notice new all-time highs on Thursday and a failed breakout. Russell Futures, RTY, beautiful run off the bottom, 958.90 up to 23.66, so much more than a double. Has pulled back sharply, but reversed off the 17-day. It's in a person sell. You want to see sharply down, take a look at from 72 on the VIX down to 23 over the course of a year. Did have a person buy signal come in Friday, but stuck below its moving averages, certainly not doing anything there. And if we look at the dollar, a little bit of a shooting star. Now the dollar goes up with interest rates. We know interest rates have been a problem of late. A reversal on the dollar would probably actually be good for stocks. Now if we go and we flip this to the weeklies very quickly, you can see on a weekly how deeply we pulled back here. And this was last March, a year ago. You see the recovery we've had. All-time high set this week. And we closed with a red candle high on the weekly as well. Clearly we're not in the strong uptrend anymore. Best case for the E-mini would be we're in chop. If we look at the Nasdaq, we can see the move the Nasdaq has had. A sell signal came in 4 weeks ago, and we are 5 weeks from the prior all-time high. Now, it seems to have done falling, but we have well off the prior highs. The Dow Futures, let me just dig into that. You could see another major run up here on the Dow Futures from the lows. And a red candle high with the all-time high set on Friday. So how is that very bearish? It's not. But you could argue that you have a trading range and you are at the top of it. And we know the Russell has had the big run. Again, a big reversal this week. Down, I think, 2.3 or 2.8%. But did set earlier in the week all-time highs. The VIX doing nothing, although it pulled back to the 200-day and bounced. And the dollar, a couple of sideways weeks. All right. Now, I did introduce you to something that absolutely caught people's eyes because a lot of people reached out to me about it, and that was the expected moves. Now, again, I think the expected moves are just another very effective piece of your armor that gives you a sense of what the markets will do. And I use them to trade at the extremes, or at least to put that information in my pocket. So I get this from TheoTrade. I didn't make this up. And this is a reflection of the 1 week forward-looking option makers handicapping of the market. So we'll go right here. So on this week here, we closed, and the center of the range of the expected move is at the prior close. Notice last week, not this week, but last week here in the S&P 500, we were up every day, but we never made it to the top of the expected move. We were in the range. Now, it's not unusual in an uptrend to just see us go from the midline to the high and live in that range. Now, this week, we actually ran up and got close to tagging the high of the expected move. And if the option makers said that that was as far as you would expect, and that's how they priced options, it wouldn't surprise you that that was the high and the market pulled back. Now, interestingly, the range was so tight and we had such a wide day here on Thursday that we actually came down, tagged the lower expected move, and closed within it. So how would you have used this? You certainly would not have wanted to go long on Thursday. And you could have been looking Friday and saying, maybe I want to start looking at positions to buy. If I look at the Nasdaq, how beautiful is this? Traded up Monday, Tuesday, stopped at the expected move and pulled back. Wednesday, a doji at the expected move. When you see that, a doji of indecision day, what do you think the likelihood's going to happen? The likelihood is it's going down. And what you see on Thursday, failed at the expected move, broke through the midline, and on Friday we had another doji. So what happens this week? Well, the expected move says, looks like it's going to have a range that is lower as far as the high than this week, but it still could be higher than it is right now. So again, I'm not buying up here. I'm looking to short. I'm not shorting down here. I'm looking to buy. Let's look at the Dow. Did nothing this week. Really lived around the midline. No extremes. Now, the Russell, interestingly, it would have been good if you were buying on Thursday as it went below the lower limit of the expected move. It did open lower than that Friday, and what happened was it opened up here, traded down and reversed and closed right at the bottom of the expected move. So what are these to me? Soft targets, and often a place to take a trade the opposite way. Clearly, you can break out of the top as we did here during this extremely strong bullish move. But the vast majority of times, the option makers know what they're doing and you stay within the expected move. The dollar right within the middle. All right. Hope you get something out of that. I find I learn a lot from Don Kaufman at Theo Trade. Now, underneath what's making this market tick. Clearly, rates have been bad for tech. And I added here not just the S&P in yellow, but the Qs in blue. And you could see sort of a divergence here where with the rates going straight up, the blue sold off much more than the yellow. The small cap stocks being much weaker than the technology stocks being much weaker than the big stocks in the S&P. On Friday, we had some weakness in the banks as well as the Fed took away one of the provisions that was giving them some cheap money and some reducing their risk. AD lines on both the small stocks and the big stocks are right off all-time highs, and both the indexes and the AD lines pulled back some, so no divergences there. Here is the NYSE pulling back. Here's a list of the major ETFs, all of them pulling back with it. And the one that's really done the worst is the TLT, which is in its own little bear market. If I look at breadth, stocks above the 200-day, stocks above the 40-day, clearly you can see on the 200-day we are in rarefied air as we are looking back 1, 2, 3, 4, 5, 6, 7, 8, 9 years. And we're about as high as we get, although we're off the highs. That is an extended market when you look at a bit of a long term. Probably less extended now when you look at stocks above the 40. And more importantly to me, the stocks above the new high, new low ratio at T2121 in Warden came off the sell signal side. And like clockwork, whenever we tag this line, when the vast majority or 100% of the stocks show new highs and no new lows, the market sells off, and it did again. Never lets me down. The McClellan, we looked last week at some clear divergence and said that might be a sign of a sell-off, and we got that, and you can see that on the daily and the weekly. Now, there are many tools I can use, and I use during the day. EdgeRater for me is predominantly an end-of-day tool, but I love how it gives me the buckets. And imagine if I could tell you in a snapshot what every stock in the S&P 1500 looks like within its Bollinger Bands. Is it in the middle, the higher part, lower part? And then you could take from top to bottom, divide it into 10 slices, and then have a slice underneath and above. Now, it turns out you can do that in Edge Rater, and I can do it in the Q Edge tool in a real-time basis. Why is it important? Well, when I look at this picture right here, it shows me that 68% of the stocks in the S&P 1500 are above the midline. That's bullish. Why all the negative vibe out here? That's bullish. And last week we were up much higher here. And I said, when this many stocks are above, you have a risk of a pullback into the center of the bands. And we don't have that anymore. So any overboughtness here has resolved. What I'm showing you here is an Edge Rater at a real-time basis. I can actually duplicate this, not just the pie, but how many stocks are above. And this would be one day before, and this would be the current day. Hindenburg omens on HGSI and other tools. I picked a couple up about 10 days ago. We haven't had any since. These are signals that a market is, that the weak hands, you and me, are buying from the strong hands. So we're going more long as the smart money's leaving. Often occur before a major market pullback. There hasn't been one without Hindenburg omens in decades. We're okay right now. The market tone, this is the Woody indicator across a number of indexes, is mostly green. I point out that we had on Thursday a line of kahunas to the downside. So big stock moves to the downside, but that didn't trip us out of a more bullish tone. That's interesting. If we look at the market review, I can't even tell you what this says. Normally we see a line here showing that high ERG stocks, high growth stocks are outperforming. I never consider the first three circles because there's so few stocks. So if we look in the middle, there's no pattern. But what I see here is that EPS rank, it was a bad week. So most of the things are negative. That's the other thing I should point out. And the higher the EPS rank, you had less negativity, although some of the low earning stocks did okay. Relative strength rank did not help you this week. Neither did group rank. It was just a confusing week. Oh, this is on Edge Rater. And what I do is I create a backup of the database in an HTML file, and Edge Rater runs that HTML file and can ask many questions customized for me. Now on the right is the group performance analysis tool in HGSI, and I look from a Friday to Friday close. And what did I see? I saw that the S&P 500 was down a little bit over 1%. In yellow, our IBD list, Market Smith was down 0.77. IBD 50, IBD live list were both down about 1%. Your weekend review was down 1.76. In green, I have my performance, which looks a lot like the IBD. So another bad week, although certainly nothing compared to the prior couple of weeks. And growth not performing well. Sector strength, again, maintained mostly a green on the Woody indicator. And if I look at it within Q Edge, though, it's not as pretty a picture. Now, the Woody indicator is using math on the sector ETFs to tell you whether they're up or down, moving up or moving down. This is looking at pure percentages. And it looks at, well, you know what? Let me show it to you what it really looks like in real life. Q Edge tool is right here. Let's go home. And you know what? Let's reset this. Uh-oh, don't reset it that much. Let me pause it and let's run it. All right, that looks good. So, here are the buckets that I showed you before. Now, during the day, where it says one day will be to the real time, and this will be the day before, 2 days before, 5, 10, and a month. Top line is sectors, next line is industry groups, and the third line is stocks. These may vary from S&P 500 results because this is using the S&P 1500. We can see over the last month, all of them have been mostly green which just tells you the market's been strong. But if we look over the last 5 days, over the last 2 days, the market has been weak and the pie of red across all three. Then we look at it on Friday, and what you see is a little bit more positivity on sectors, but industry groups and stocks are kind of 50-50. Sector performance, if one looks at 1 day and 7 wins, 4 losses, the big win being energy. We showed you a lot of mixed looking ones in my sector report and trade station. However, when we look at both days, the vast majority are down, and the only thing up for both 1 and 2 days are utilities, which one might think of as a defensive group. If we look out over 5, 10, and 1 month, you could see we've gone from a very strong market a month ago and 10 days ago to a much weaker market with only 1 positive sector out of the 11. Now, if I look at the sectors specifically, I can see here 1 day, 2 day performance. And again, come Monday morning, the 1 day is not going to change. All these will be exactly the same, but the real time will start to populate. When the market's over, then that will become the 1 day and will impact everything to the right. You can see there are 11 sectors, and you can see in the various time frames, going back a year, 11 months, 10 months, 9 months, everything has been positive. And over the last 2 and 5 days, 1 and 10, although looked a little bit better on Friday. If I go best to worst, energy and consumer discretionary were leading on Friday, followed by healthcare, and bringing up the bottom are real estate, materials, and industrials. Now, I like to do my fishing in the top industry or top sectors, and I'm going to look at energy, discretionary, and healthcare. And the reason I included healthcare is that what a big turnaround. It had been very weak. It just turned positive. Discretionary has been positive for a while, and energy's been tough because it's been up and down. And let's go hit these gears, and it's going to bring up the industry groups in those 3 sectors. All right. Now you can see here I have 147 industry groups, but I'm only showing those in those desired sectors. Let's rank them top to bottom, and I'm interested in 140 and above, so I'm going to highlight those. And so these are the top sectors and the top industry groups. I'm going to hit this magnifying glass, and it's going to pull up for me the stocks in those industry groups within the S&P 1500, 1 day performance, 2 day, 5 days, so on and so forth. We've got some earnings growth. We got some valuation as well. Now, this is Q Edge. I know these 3 stars will find me undervalued stocks with good earnings. And these are the 3 that comes up to the top. You got some exploration and production. I already own that stock. You got some transportation, more production. And then what I typically do is I would take this list into TradeStation and look at them. But let's say when I look down here, I'm intrigued by this HVT. It's undervalued because it's blue. It's got revenue growth over here, which my energy don't have. It's got some good earnings per share growth, at least the last 2 quarters and the last several of years. So it's kind of like a box 7 stock that it's stubbed its toes. So I could actually copy that. And then I'm going to bring up the Vital. Now, the problem with Edge, and not the problem, wrong word, the reality of Edge is it is a tool that is based upon the S&P 1500. But now I'm going to go into a tool that is based upon the Reuters universe, which actually can go international as well if you want. And I think we're looking at just USA here. That would be my intent, yes. So tells me a little bit about HVT. I don't know anything about it. Haverty Furniture, kind of a middle-of-the-road furniture company. Notice that all the stocks in this group were positive today. That's interesting. The blue here means it's undervalued, good earnings quality. excellent. This gives me some fundamentals, limited number of stocks, and I know that, Williams Sonoma just popped on earnings. So I'm going to go hit this thing here. Bring me the stocks that are in this industry group or similar. We can see one-day performance. I can rank them. The big winner was probably WSM. Nope, actually Home was the big winner. WSM was only up 8.21. Oh, it was 2 days ago, a couple days ago that it went up. So it's been up on the week. It was up 29%. The one that looks the most undervalued, however, is this HVTN. Now, I'm a TradeStation guy, so I can come over here, and the symbol is there. In fact, let's see if this worked. It probably didn't work because I wasn't doing it the right way. I go over here, and potential buy. Let's just take a look at HVT. So the interesting thing is that it's undervalued, because when you look at it, it's far from undervalued. Look at this big move it's been in. And wouldn't you have liked to have gotten buy signals off of trend line support here, down here? It's way too gone. We'll look at charts later. So I use these things during the day to find things, and I do look for things that are undervalued that are starting to get ripe for the picking. So let me jump in here. Canaries in the coal mine. This is our extended version of FANG. Price line's now called booking. It's booking in the chart. I'm a little nervous here because we have traded down to this dashed blue line. That dashed blue line is the 100-day SMA. We are in a weekly bond go down. You could see when we had the 3 Hindenburgs fire and the market sold off. I got to get above that 50 quickly before I'm going to feel good. It's had several attempts. You can see mobile breakouts here, just not working. Now, I guess the good news here is the person market catcher is showing the relative strength is actually improving as the stock is going nowhere. Somebody asked me, Jeff, what's this blue line here? I never saw it before. Yeah, I'm trying to reproduce this. One of the things that I like a lot in MarketSmith is this scan here, which is RS line blue dot. And these are stocks that have new lines and new highs in relative strength, but might not yet in price. So let's just look at Newell Brands here. So as you can see, it's right below the pivot, and its relative strength ratio is 75, so it's just off new highs. So that one was a weekly one. So let's see what it looks like on the weekly. On the weekly, it's setting a recent high, and it's below the high here. So I found that having the relative strength rating on the chart was valuable. So I thought, why don't we put that into HGSI? So this blue line, and I'll show you how I did it if I remember when I look at the charts, is try to duplicate that. And right here, it tells me what the relative strength rank is on the canaries. And that's compared to the Spider ETF. Know your news and earnings. Now, what's not up here is, I believe, both Janet and Powell will be speaking Tuesday and Wednesday, I think, in Congress or somewhere. So they've been supportive of the market, although Paul's comments, even though they went up, drove the market higher on Wednesday, I think that may have been partly why rates popped on Thursday and took the market down. Got some employment numbers on Thursday. I think the big mover here is going to be Powell and Yellen talking. If you look at earnings, there's still a bunch of earnings. Really interesting to see what they say at GameStop, why they didn't do a secondary when the stock was at $400. Heck, they could have done, a couple 100 million shares and bought Best Buy. What a missed opportunity, in my opinion. But what do I know? I'm a physician. Winnebago's had some good numbers. Grow Generation, Restoration Hardware, KB Homes, Blink, the charging company. So there's plenty of things here, although not the major players, as I think for the most part earnings season is over. It's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. So rising rates continue to whip the markets, especially the Nasdaq and TLT. Despite some large intraday moves, most major markets ended the week down less than 1%, except the Russell, which was down 2.8%. This economic boom is supposedly moving forward, although there have been more COVID in Europe and in pockets of the U.S. Protecting the markets and the economy seems to be job number one in the Fed and the Biden administration. Stimulus checks are being delivered. Vaccines have become more available. I've got my first one. I got my second April 9th. And the Fed is trying to keep rates low. Bonds have entered a bear market. TLT is down 21.8 from its 52-week high. And this is despite the dollar being down 14%, or rather, despite the dollar being down 14%, gold continues to languish about 16% off of its highs. I've continued to prune my portfolio. I've taken some profits on long-term positions as I raise cash to pay for some big purchases and upcoming taxes. And I will continue to be prudent with my money, kind of. I just bought another expensive car. And we'll play the markets to the upside and downside as conditions avail themselves. But I'm going to play small ball until the chop is eliminated. So I ask you this question for a very important reason. How would you judge this market? Strong, mixed weak, or weak? If we look at 5-day performance, spiders were down, Nasdaq was down, the Dow Industrials were down, the 50 ETF was down. If we look at from the 52-week high, we can see everything is down. Biotech's down 10%, the FANGs are down 11%, the IBD 50 ETF's down 6.4%, the Nasdaq's down 7.4%. The S&P is only down 2.2 off of its 52-week high. And you can see for many of those 52-week highs were very recent. So how would you judge this? Can't judge it for you. You need to judge it yourself. So I want you to tell yourself what you think it is. I'm going to call this a mixed week. It's not weak enough yet because we haven't broken down in all the indexes. There's no baby out with the bathwater the last couple of days, even though the market had some big moves. But I can't call this strong. And I don't even think I can call it mixed strong. So I'm going to call this mixed weak. Now, let me tell you why it's important. I made a comment 10 minutes ago that no matter how good of a stock picker you or I are, it's how the market does this week that's going to determine your portfolio, because the market's the biggest piece. So this is ancient, so old. I suspect that Ian's probably not the only one from this group that's no longer with us. It's that old. But imagine if in a room every month you had 15 or 20 great stock pickers. And those stock pickers were led by the ultimate stock picker, Ian Woodward. And each month they do a top-down review of the markets, and they would identify what they thought were the top stocks in the market. Somebody was keeping track. And then retrospectively, they went back and without looking at the results, looked at each month and identified that month by market type. Then they looked after 15 months and looked at performance. So what do you see there? Well, I'll tell you what I see. I see a couple of very strong messages that smart people picking stocks who had demonstrated great acuity of doing well in a strong market could double their money in 20 days. Even in a mixed strong market, they could double their money in 20 days. But the same great stock pickers led by the same great Ian Woodward, sucked during mixed week and weak markets. So that's the first learning. In strong markets, when the wind's at your back, you make more money and don't fight the wind. There's another message there. The message is twofold. Take your winnings. If you don't take winnings off, the market doesn't keep going typically. Even in a strong market at 40 days, some of that initial movement was given back. On a mixed strong market, the majority was given back. So take profits. What about losses? Well, in a mixed weak market, where there's still some strength there, they certainly did moderate. But in a really weak market, guess what happened over the next month? It got worse. So you gotta take off your losers as well. Again, what kind of a market are we in right now? I'm going to take mixed week, and hence why I haven't dumped everything, because I've got a longer time frame, I hope. But I've taken a lot of profits, and I'm not going to tell you to go in and buy everything in the market. Sorry, FOMO friend around the corner, I can't tell you that right now. You know who you are. So that was my take, and I probably should stop here, but I'm a glutton for punishment, so I'm going to keep going for a few more minutes. I look at a lot of tools to help me. I still like some of those things I look at in TradeStation. So I look at 6 things or so. I start with, here's a daily, a weekly, and a monthly S&P futures. Here I go, more indexes again. Sorry, folks. This is how you make money in the market. You don't make it by picking stocks and ignoring the stock market. What do I see here? I see the S&P 500 in TradeStation went into a sell signal here. It has MACD divergence. How do I know it has MACD divergence? Because I've got much higher highs and I've got lower MACD than I did back here. That's why those red dots light up, okay? The fact that the paint bar is red is an Alexander Elder indicator that says I should be short or holding. I shouldn't be entering new positions. I look at the weekly, it's blue, but I believe it's in a sell signal if I can see it. I can't see it on this, so maybe it's not. And then the monthly is still in green. So I've got a short-term pullback and otherwise a strong uptrend. The Laguerre RSI went positive a couple weeks ago. With this buy signal, it's still positive. I see a market here in a little bit of a correction, but I don't have to jump in and buy it on Monday. I may if it changes, but right now I feel like I'm sitting on my hands. The Dow, new sell signal on Friday, and it's blue. It's got MACD divergence. Again, look at higher highs, but not higher highs on the MACD. Same thing on the weekly. Look here, you can see the MACD histogram is just barely positive with much higher highs. We look at so it's already rolling over. Again, is it dead yet? No, but look how it does this. It goes from, well, I'll do this on the S&P. Well, I'll wait till I get to the cash markets. But you basically are in a trading range, and we're at the top of the trading range with sell signals. Who wants to go long here? Look at the Russell. Laguerre RSI sell and a person sell, a red paint bar. You got up to the top here and you've pulled back. Again, do I want to be buying this? No, I got to wait and see some health come into this market. And even if it pulls back a little bit more, it's not damaged. Just not time for me to go long. Then the Nasdaq, which had a great day on Friday, still in a sell signal, and even a 45-point move was not enough to take out of red. We're in a sell signal week and red on weekly. Nasdaq's got a lot of damage to fix as well. The dollar, the Laguerre RSI buy signal. So the dollar is down, but it's certainly stabilized on the daily. You can see how much it's fallen on the weekly. So do you see health there? I don't. Okay. Now let's go into HGSI very quickly. I've got major markets plus the 36 things there. You can see how you rank them from strength to weakness. And let's start differently. Let's look at Bitcoin to start today. So you want to know where the money is? Just ask my son, the Bitcoin king. Can you believe my son? I love my son. He's turning out to be a lot more like me than he ever wanted to be. He's turning into a bit of a trader himself. For Christmas, works for a guy who is in finance. My son is sort of the ACT and SAT and college prep essay tutor to the stars. And he got, I think, a half a Bitcoin for a Christmas bonus for a family he's been working for 3 or 4 months before Christmas. It's like gone from 12 grand to 60 grand in a couple of months. God bless him. He's a brilliant and turned out to be a good kid. So for those of you with little kids and wondering what happens, do they grow up? They grow up and they make you proud. So here's Bitcoin, lower left, upper right. It's off its highs. It's a beautiful pattern. Look at the relative strength. It's 95% compared to the S&P 500. Give me a stock that looks like that, and I'll talk about buying it. It stubbed its toes here. Now, there are some things you can buy if you think Bitcoin's going higher. Riot Blockchain. This used to be a biotech, and they became a Bitcoin miner. Looks a lot like the Bitcoin price. This thing moves when Bitcoin moves. Relative strength rank, 99, despite the fact it's kind of ugly right now. Marathon Patent Company, and they call it Digital Holdings. Tied very much to the price of Bitcoin. MSTR. Here's the power of Citron. They came out and said when this stock was like in the 200s, that this stock was going to 700 because it's a new Bitcoin miner that's doing great. Went up to over 1,200. Now you can buy it for 700. So you want to play Bitcoin or you don't want to play Bitcoin, those 3 stocks, all of which I've been in and out of from time to time, are ways that you can capture the move in Bitcoin. It's not Bitcoin, but it's tied to the price of Bitcoin. So let's take a look at the market. So couple things I want to show you here. First of all, you won't see a relative strength on the S&P versus itself, so forget about it. Magenta here is an 8-day exponential. Green is a 17 simple. Blue is a 50 simple. Red is a 200-day simple moving average. The horizontal lines are tied to the fibs retracements coming off the bottom in the past. Let's see what else I can tell you. This green line here, the red line up here are chandelier stops. The green and red dots are the Wilder RSI. On stock charts, you'll see a thick gray line. That's the industry group. This tells me how it compares to its major indexes. Anything else I want to show you here? Nope. So what do I think about the S&P 500? You know, let's draw some trend lines and I'll show you what I think. I think that one could say something like you got this here, something like that, and maybe you got something like this down here, and you're in the middle heading to the bottom, and that you probably want to be buying it off the 50 there, off the 50 here, and maybe in 2 or 3 days off the 50 here. So S&P, I wouldn't be selling things now. If you want to know when you should be selling things, well, you know when. You want to sell them off here. You want to sell them off here. You don't want to be selling them necessarily here. You want to sell them at the top, and you want to sell them when they break through. So S&P doesn't look so bad. It looks like a mild pullback. I'd expect a bounce soon, unless something's changed this time. The Dow Jones Industrial, I mean, what's to be not like about this thing? Um, Shallow pullback right off the highs. I don't like that bar. I do not like this failed new high with a red candle high, but it hasn't broken down yet. And what's my target? My target is this 50-day moving average. If it pulls back, I don't know it's going to make it that far. The Nasdaq. Here I'm Mr. Bearish. Doesn't look so bad. The Nasdaq got to get above the 50, just like the fangs. And then if I look at the Russell 2000, if I could find it, like the others, besides the Nasdaq, well above the 50, in the midst of a range. Could it pull back to the 50 and bounce? Boy, that would be a good place to be lining up to buy. May or may not get that far. So that doesn't sound so bad. So it's not a weak market. It's not a strong market. It's more down feeling than up feeling, so I'm going to pull it into a mixed weak category. Be careful. It can change. Now, I like to look at other things as well. Since I'm an IBD 50 follower, how is the IBD 50 doing? Not so good. It's sitting above the 50. Could be an opportune bounce point, but it's significantly off its highs. In fact, percent change. Somewhere I have it off the 52. 6% off the 52-week high, which is up there. That's not too bad. Okay. Its relative strength rank is 55. All right, let's look at the fangs. I already showed you they're weak. They're below the 55, and I suspect that means I'm somewhere in the 60 to 80 range, which is why it's yellow. How about Biotech? I like it much better when it does it in alphabetical order. Somewhere in here is Biotech. I know it's here. I know it's here. It's the IBB. I guess I could pretend I know tickers. Always looks more impressive when they do that anyways, doesn't it? IBB. You know, I like to see it get above the 50. It's clearly in a downtrend. The SOX. Broke down below the 50, struggling to get back above it. Now, if you believe that Cathie Wood is a genius, and I know many people do, let's look at hers. Technology and robotics, below the 50, not so good. FinTech innovation, below the 50. Genomic revolution, not so good. Arc Innovative, not so good. Israel, not so good. Next Gen Internet, not so good. I'm not picking on Cathie Wood. All I'm saying is, let's take a look at the Qs. Kind of look like all Cathie Wood's indexes. I think that, I'm not saying her luster's off. Her luster's off right now. Growth isn't working. All those things are big growth stock investors. Growth stock ETFs. What else do I want to look at today? Let's look at bonds. Nope. Is it bouncing here? Who knows? Bingos. Baby's out with the bathwaters. Look at the high jump is at 0. Look at the relative strength rank is 3. You can't buy them just because they're cheap. Look for reasons to buy them. Look for evidence that it's done going down. Oh, now it's going to do this for me. Let's look at the dollar. Off its lows, relative strength rank still sucks, and you can see it down here on the weekly. VIX is so low, it was so high before, and there's been so many splits, the daily's useless, but you can see how far it's fallen on the weekly, and here's the Ultra VIX short term. Now, disappointing to me is gold. Dollar's weak, gold should be up, and not so much. Got to get above this, and really like to see it get back above the 200, but at least above its chandelier stop, you could be nibbling. Gold miners, right at that 50, getting close to being interesting. But again, be safer above the 200. And silver kind of looks like gold miners. So I've gone through the major indexes. Again, I'm trying not to be really excited about the market. Now, of course, there were quite a few decent stocks on my weekend review. And that was because we had an up day on Friday in the Nasdaq and for growth. So let's go to industries, warehouse, 174. Let's look at 2-day force. And you can see we had 66 groups to the upside, rank them by raw rank. And if we look 2-day down, just 2. So short term looks really good. 5-day down is 51 and 5-day up is 53. So over 5 days, the market's kind of a tie, but over the short term, it turned up some. These are the top industry groups. I really am not telling you to go out and load up. I want this market to settle down before I go in. E-commerce discretionary. Take Hung Art Company Limited is a new company to me. Don't know anything about it. It's one of these that probably had a ton of volume this week. Let's see. This day here, which would have been Thursday, it had 49 million shares. Its average volume is 3. If I had to know, I could go to more info from Web, FinViz, and it'll open up to this stock. And what does it say? NFT speculation. No thanks. What else is in this group that was positive? Amazon. People know it's my biggest holding. It's done nothing for quite some time. I'll probably end up selling it this year if they don't have a higher capital gains tax for 2021. It's a source of margin funds for most of my trading, so I leave it alone, and I have a cost basis of about $450. So, it made the list because it had a big up day on decent volume. I still have puts on it because I don't trust it. Alibaba, no. That's the index. I'm just going to go down and look through the index today. Biotech. I'm going to put a cautious, I'm interested in this stock. How much did GSK pay for TSRO? $5.1 billion deal, okay? Why did they buy them? Because they had a type of drug that's called a PARP inhibitor. To be fair, TSRO also had an interesting pipeline. Clovis Oncology also has a PARP inhibitor. Skyrockets on ovarian cancer drug success. So it's back in play. Its market cap is $821 million. It's probably worth $2 to $3 billion in a takeover. That's 2 to 3 times in price from here. It's kind of like buying an option that never expires. The stock closed at a little bit under $8 a share. Why not buy a few hundred and put it away for a rainy day? This is not a GameStop. This is not a move because of Reddit traders. This is a move because of a fundamental difference in the company from before that news was out. Bible gap up, mobile breakout from a squeeze, and a kahuna. And I do not have an NDA in place with this company. I haven't talked with them in 2 years, and it's something that I might consider buying here. I do know that the company has not been in good shape, but this might change it. So just something to think about. I'll just go down one to Novavax. Novavax did have some positive news, and I'm interested in Novavax. It's above the 50. It's a deep pullback, which a little bit more than I'd like to see. Why am I interested? You see this earnings per share growth coming in. This is why I'm interested. Market cap of 16 billion, 17 billion, and it will get its vaccine approved. mRNA, Moderna, Look at its market cap, 57 million. If Novavax gets it approved, does it go up 50% from here? Probably, if not more. So I'm interested there. Biofuels. Keep in mind that's a speculative, high-risk comment because they're all too expensive in my mind. Gevo looks interesting here. Pullback kind of looks just like the last company, Novavax. Mobile breakup from a squeeze, Kahuna getting up about the 50, a cheap stock, probably a low-risk play, and I believe it's optionable if you really want to take a run without risking much. Again, then you have the index. There's very few stocks that are leading here. Consumer electronics, Vuzix, I think they make cheap LCD panels. I thought, here it says wearable stuff, breaking out to new highs. It's a beautiful chart. It's had a long run, doesn't have much revenue or earnings. You have to do your research, clearly under demand. This one kind of smells like Reddit crowd. Not saying it's bad. Copin actually thought was interesting. Pullback, sort of give you a short base here. Mobile breakout from a squeeze and a Kahuna. That one made it to my buy list. Steel producers, ZKIN, Chinese steel company, breaking out, but it came right back down, so I probably wouldn't touch it. That's not to say that I don't like steel. Here's Nucor, probably gone too far. ArcelorMittal, Gerbau. This one looks interesting. Give you a little base. Look to break out from that base. That's Ternium. And U.S. Steel broke out, but it's not doing a whole lot. Renewable energy used to have a lot of stocks in the top. We got a few here. These are all been beaten up hard. Sunrun, can't buy it here. Plug Power, don't want to buy it there. Enphase, not yet. Solar Edge, not yet. Get above this 50 and hold. Might be interesting, but it's been a downtrend. Canadian Solar had great earnings, and that's probably what popped all of these. Let's look for 1 second at Solar Edge. Look at the weekly. It's much easier to see this. It's in a downtrend. Okay? We don't buy downtrends. All right? If you believe you want to buy downtrends and you want to play downtrends, you short them at the top and you buy them on the bottom and you hope you get out before it goes down to the next, because until proven otherwise, this is what we expect it to do. Are these changing? They might be, but it's too early to say in my book. Specialty pharma. I like TG Therapeutics. Had a recent drug approval, gapped up on the news, pulled back, looks like it's ready to run again. Out of a squeeze, a mobile breakout to Hunitz and a John Person buy. Certainly not inexpensive. Therapeutics MD, not my, I didn't hit it enough. Back to TG Therapeutics. Here's Beijing. It's funny, TG Therapeutics has drugs in the same class of Beijing from an approval perspective. Beijing's got a pretty impressive pipeline. Looks like it's breaking out. If here, Amgen has a big investment in Beijing. Bridge Bio, kind of sideways. So I will go through the top 10 every night. Security services, nothing's above it. The next couple look interesting. Recor, a breakout here. Breakouts have been failing. It's not that high above the pivot. Let's see what it looks like in REKR. Let's go down to daily. It's happened on a lot of stocks that have big moves. 300, all right, and the weekly, it's far from the pivot. Earnings per share growth isn't that exciting for me. But Recor is moving, as is the one underneath it, which is Residio. A little bit less exciting, but a little bit safer to be looking at. Power equipment, kind of like solar, have had some big moves, but pulled back. Here's Blink. I'd rather buy it when it breaks above the 50 because right now I got to get above my chandelier stops, got to get above the 50. And a lot of people are saying if it only comes up, I'm going to sell. So I'd be careful there. Number 10, application software. A lot of them made the list. This is a huge list, but they all look the same. Below the 50 on Intuit, NetEase below the 50, Salesforce below the 50, Zoom is broken, Digital Turbine's the one above the 50. This is one to keep an eye on. I will point out that this is one where, let's see if I can find it. MarketSmith has called this a model book stock for ages. And I just love MarketSmith for I don't show you it much. I historically have used it mostly on the earnings, but the more I watch IBD Live, the more value I find in it. You can see that the relative strength rank, despite this pullback, is 97 on Digital Turbine apps. All right. I didn't really want to go further, but I just want to mention casinos and gaming. It's one of my biggest positions, Penn National Gaming. It's kind of like having casinos. They bought El Dorado, and they recently bought some other casinos. But what they have that's really great is they have internet gaming, or whatever they call it. Betting like DraftKings, and that's what's propelled this, Caesars and DraftKings. It's ugly, but it stopped at its 50. Maybe put your buy stop above the chandelier stop, which is where. So the close is 117.37. The chandelier stop is at 122. That's too far away. This is something you could look at, put the stop under the 50. I'd have no issue with that. I mean, DraftKings, why it's not showing up, I don't know. Must have been down on the day. But DraftKings is another one that I like a lot. I don't know why it's in econ, because it's a retail discretionary. Okay, so I've gone through the top 10 groups. Let me just show you, here's relative strength rank is 93. Well, how did I get that into this box, or get this line here? So I'm going to go into my chart. In the price window, relative strength comparative is an indicator built in. Use private scale. I colored it blue. I don't know if I need to normalize it to start at 0 or not. And I'm going to start playing around with moving average periods to see if I can't get it to look more exact to what I see in MarketSmith. If somebody's already figured that out, please drop me a line. But that's all I did to get that on the chart. And then in one of these warehouse fields, I created a box. That box has relative strength in it. That'll be the last one I find, won't it? All right, I got a lot of boxes in this one, don't I? Well, somewhere in a box I have it. I thought it was the most recent one I did. Similar internals. I have relative strength up. Had relative strength rank. I'm just hit cancel so it doesn't take it out. So that's how I did to build this, and you can see the relative strength rank here. The blue line, which is this line here, it's getting lost in there, but it's at all-time highs. And you could see this dark gray is the industry group. I know people like to see my buy watch list, so very quickly, I'm going to look at that. So first, I'm going to put up my list of 55 stocks that I thought were interesting. Some of them we've already looked at this evening. So Magnite is an advertising company. Doesn't have much in earnings. Revenue has been growing. Pull back to the 50 and a bump. I like this pattern. I'm already in the stock. Relative strength rank is 97. As that company, similar chart pattern, looked like it was going to fail on Thursday, had a great Friday with in a squeeze, a pocket pivot, and a kahuna off of the 50. Every Holdings Consumer Finance sitting above the 50. Great earnings per share growth. I hate buying these shippers, but look at the earnings per share growth on Star Bulk Carriers breaking out here. I only hate them because I've lost money on them. This one came up, Novartis, looks a lot better in TradeStation, but coming off the bottom pays a 2.4% dividend. Let's just look at the pullbacks in an uptrend, and then I'm going to say goodnight. Pullbacks ready to run, 24 of them. These are my favorite stocks that I like to buy from this list. So I'm going to go through very quickly. Some I like more than others. Again, this is for what it is. This is discussion purposes only and for education and not investment advice. Broadcom, long uptrend, pullback, just broke above the 50, mobile breakout from a squeeze, person buy, pocket pivot, big volume, probably had earnings come out, seeing that next earnings are not till June. I like Broadcom. I don't want to do it that way. I want to do it. Magnite, we just looked at. Copen, we looked at earlier. Danaher, I'd like to see it move up, but here's a great uptrend, sideways move off the 200. So the risk here is it stalls at the 50. Mobile breakout from a squeeze, person buy, pocket pivot, and kahuna. You know, if you wanted to take a little bite at the apple, the close was at 221. The 50 is at 230, so it's $9 away. I'm going to look at this stock. You might see a 4% move and run into resistance at the 50, but it's in a good industry group, and you know you can set your stop just below the 200, and you're not risking a ton. Callon Petroleum, Java we looked at, Abbott Labs. Here's one I like even more. Look at the weekly chart, beautiful uptrend. Look at the relative strength rank, not so good, but here's a stock that's pulled back to the 50 in a squeeze, just had two mobile breakouts, person buy signal just fired, pocket pivots, and big volumes. Pays a teeny dividend. Vista Outdoor, I have a hard time buying it because it's ammo, but that's my problem, not yours. And my wife is against guns. I'm sort of neutral. Breakout, mobile breakout from a squeeze, person buy, pocket pivots, kahunas. That one looks interesting. Amcor Technology. I looked at this the last couple of weeks. It just feels like it wants to go higher. 86% of relative strength, mobile breakout from a squeeze. Ace Industrial Holdings. Let it clear. It's chandelier, but you got a mobile breakout from a squeeze, a new person buy, and a kahuna on a pullback to the 50 in an uptrend. I like that a lot. Bristol Myers Squibb, break it out above its 50 and its chandelier stop. Floor and Decor, let it get above the 50, not yet ready. 5 below, sitting right on its 50, had a kahuna and a mobile breakout from a squeeze. Already showed the TG. Boot Barn, big sideways move and broke out. So it's already starting its move. Kohl's Corp, I'd watch and see if it breaks out from this high base. B&G Holdings, sideways move, took out its chandelier stop. Kahuna, pocket pivot. Here's a pocket pivot, here's a kahuna, here's mobile breakout coming out of the squeeze. Artisan Partners, 6.4% dividend. Huntsman is a specialty chemical. It's a little loose here, but it pulled back and bounced off the 50. Mobile breakout from a squeeze, pocket pivot, and person buy. PacWest Bank Corp, a number of banks look like this. Sold off early, came back, bunch of pocket pivots, huge volume. I showed you Aztec, Utz brand. I think they make pretzels and crap like that. Nice uptrend, pullback, breakout, mobile breakout from a squeeze. Person buy, pocket pivot, kahuna, teeny weeny dividend. Every Holdings is consumer finance. Lantis Holdings is healthcare, sort of a high base, kind of almost like a saucer, a little bit of a cup maybe. Mobile breakout from a squeeze, pocket pivot, kahuna, and a person buy signal. That looks interesting up there. And that was my pullbacks ready to run. And just for newbies, I categorize those by buy stocks and stocks with Bible gap ups. So Williams-Sonoma had a Bible gap up here, and just there's rules to follow them. I'm not going to go through that now. Botting fishing for nuggets was my Clovis. I mean, this is not, you're buying the stock that used to be $80 stock, and you're bottom fishing because maybe it's going to move up. Breakout EPS All-Stars, I didn't see any this week. Maybe stocks breaking out on great earnings. Broken out and running, something like Facebook. It's already broken out. The buy was a couple days earlier, probably down here. So rather than call that a pullback, it's not pulled back anymore. It's already running. Filtered buys, I come through these looking at a large list, running it through my trade station, and it adds a few to the list. Leaders extended are gone, something like VIP Shop. Keeps on going, and it may keep on going for a long time. But you'd like to find these on a pullback like it did here. What a great opportunity back to the 50. The funny thing is, people were probably wanting to get out there because it felt different than it did on the way up. What a beautiful stock that's been. I show you pullbacks ready to run. I also build a list of pullbacks waiting for a signal. Illumina made that list. So it's sitting here right around the 50. I got to see it break above the 50. I'd like to see a mobile breakout or a kahuna. So these are a list that I'm watching. Rent-A-Center has been a beast. It's pulled back to the 17. I want to watch that. Does it move up there with a new person buy signal? That would be a signal for me. Special situations are typically things that have a story to it or a big dividend. I do that every weekend. What I also do is I drop my stocks into various watch lists. So within Thinkorswim, I have a watch list. I have a number of indicators here, and I get signals throughout the day when the indicators set up. In TradeStation, I build a much bigger list in what's called sonar or radar screen, and I could look for example, let's see if I got the new one here. Yep, pullbacks, bearish pullbacks, bullish pullbacks. A lot of the ones we talked about are in here. Here's the AVGO and the AZEK. Etsy, I could have showed you. Givo is in here. This is where I find a lot of my good choices. TG Therapeutics is in here. And I am able to monitor in here a number of different things I like to look for. On that note, well, one other thing, I also do scanning in TradeStation, where some of my favorite indicators are built in, John Person and Q. So I can either look in radar screen, or here are stocks, for example, that I love. Weekly, make sure I get the right one. Trend line, support. So these should be stocks that have pulled down to a trend line, and I could just copy them, drop them over into one of my screening tools. I promise I'm almost done. For not wanting to show stocks, I can't shut up. My wife is right. I need to retire from this. But I like it too much, so not going to happen. So these should be stocks that have pulled back to weekly support. Let's just see if any of them look interesting. What you're looking for is something that's pulled back to weekly support and then gives you some type of a buy signal. Sometimes you see them, sometimes you don't. Biogen is pulled back to weekly support and daily support. It's got a lot of trend lines on top of it. It's in a wedge there, so I'm going to pass on that. See, this is what you're playing for. You're playing for this, which is in November and probably will correlate to around here. Pull back to both weekly and daily support. So, I'm not seeing that right now. We'll keep going on the list very quickly to see if anything matches up with that pattern. So here's Fedex, and Fedex did, sitting right on weekly trend line support. A new buy signal came in. It ran a lot up into resistance, but probably worth watching. Fizz. I've looked at plenty, but this is what I do all day on Saturday as I look at charts, various scans, watch list, etc. So on that note, I'm going to say goodnight. Any of these good? Let me just finish this list. I don't want to hang up and then find something that I should have showed you. But this is, my wife calls it flickies, and I flick through a bunch of charts looking to find things that meet my criteria. I find them through Edge, I find through HGSI, through EdgeRater, and numerous other tools. And I'm a big believer in knowing what's going on in the weekly charts. Okay. Close. TAP. It's got a weekly pullback to support with a buy signal. It's had a recent buy signal on the daily, bullish candle on Friday. The only problem I have with it is it's going to run up, still, that's about $5 before you run into resistance. I can't do it. Sometimes you find them, sometimes you don't. On that note, folks, I'm going to say goodnight. It is late. It's 1:13. I want to post it before I go to bed. Have an outstanding week. Trade safe. You don't always have to trade often. And before you finish this, ask yourself, what kind of a market am I in? And is it in a market where the wind is at my back or in my face? Good luck. Hopefully I'll see you next week. Goodbye.